Jim, forget the event, right? In the context of we don't need to discuss the new model of an iPhone.
Yeah.
What I need to discuss with you is the importance right now of Apple from keeping this market from going down further or enabling it to go up more from here. I think that's what matters more than anything else, rather than the size and the features on whatever the next phone is going to be at this particular moment.
Yeah, you sold me on forget the event. Totally agree.
Not forget the event, but you know what I mean.
I know what you mean. It's 6.5% of the spiders. It's 11%, give or take, of the triple Qs. A lot of people, when they come into the market, use those passive ETFs. And by the way, those are far from the only ETFs that have high exposure to Apple. So yes, by definition, it's a tautology that it is important to the direction of the market.
Is it the most important stock right now, as some have suggested?
No, and I will tell you why. Simply, first off, empirical evidence. You go back about a year and a half ago. I know it's a long time ago, but the second quarter of 2021, it labored while the market went higher. So we know just factually on evidence that it can underperform and the market do well. The other thing is there is a very plausible scenario in which Apple does just fine. You know, maybe it goes up 4 or 5% from here to year end, but other portions of the market do better just based on better earnings projections. That's a plausible scenario. I'll leave it at that.
Okay, Josh Brown, you have been making the argument most recently that Apple's importance is more important, just given where the market is right now.
Yeah, I agree with Jim. Just because this is an important stock doesn't mean it has to lead the market in terms of returns. And we've seen several environments where, we've been poking Apple with a stick. Come on, do something. What's wrong with you? While there's been money to be made elsewhere. So I think that's really the salient point. However, a little bit of a twist. Apple can't crash. It's a $2.5 trillion market cap. It's in every ETF. It's in every index. So while it doesn't have to be a leader, it has to hold up, right? It could lag. It could be flat. It could be down a little bit. But Apple can't drop a bombshell about orders in China or this iPhone model being the first one in a long time to be slow. It is a $1,400 iPhone after all. So that can't happen this year. But the stock is up 675% over 10 years. The S&P in that time is up 240%. It would be okay if Apple lagged and the rest of the market now took the lead, or some other group of 10 or 50 gigantic stocks started to gain in importance while Apple faded. That would be perfectly fine.
The likelihood of that seems minimal. Jenny?
The likelihood of it fading seems minimal.
No. The likelihood of 30 huge stocks doing great, and all of a sudden Apple's going to start doing badly. So one would offset the other.
Chevron.
One would offset the other.
Here's my prediction. My prediction is that we're going to look back in 10 years from now, and Apple will, relative to another 30 stocks, will have done a whole lot of nothing. But I also think when we're arguing about S&P earnings, you look at Apple, that makes up about 7% of S&P earnings, and you look at their earnings estimates for the next few years, and it's up 8% earnings growth, 6% earnings growth, 6% the year after that. So I think it just kind of sits there as a dead weight of stability, which cuts both ways. Right? It might keep earnings stable, might keep the market stable, but I also think that we're in a more tepid environment for the next decade.
Rob, quickly, too. Dead weight Apple.
Well, it's been a dead weight since mid-August. I'm like everybody else. Every time I upgrade the quality in the portfolio, we add to Apple for obvious reasons. We did the same thing in mid-August, along with Eli Lilly, H&R Block, Vertex, all of which I talked about on the show. And since then every one of them has outperformed Apple. And, Apple's up in line with the market. So I think when you have a stock that trades at 27 times next year's earnings, and it's trading at a 15% premium to its long-term average, 50% premium to its peers, I'm hoping I'm wrong on this, because me and a lot of other people hide in Apple because of the earnings quality of the name. But, since the latest highs on the bear market bounce, it's been a market performer. So you clearly have to think outside of Apple if you want to generate some alpha.